Let's get the street's take as well on the latest inflation print and bring in Jefferies chief market strategist David Zervos, who joins us here at Post 9. I saw you reacting to Steve off camera. Your thoughts?
Well, first, just let me apologize for sounding like RFK Jr. a little bit. My voice is just running out of steam after the post-election period. It's a lot of calls with a lot of clients and a lot of running around. So I wanted that caveat up front.
Okay.
I don't think the data matter that much for the Fed. This was a pretty down-the-middle data print. It's an important one, but I don't think there was any surprise that would get them to move either way. I think the markets so far have told you that. We just have a lot of really big picture stuff to talk about. Like, I know it's fun to talk about the day-to-day and what's moving the market, but I'm just getting so excited for the deregulation trade, the smaller government trade, the fact that the bond market, that yields are lower than they were on November 5th in the 10-year by 5 or 6 basis
right.
points.
Trump trade was supposed to be a big steepener,
Big
right?
steepener. And, stocks are up, dollar's stronger. It's all kind of working the way many thought. I mean, not the 17 Nobel laureates that thought global Armageddon would happen if Trump won. But I really am focused on this long end of the Treasury. I think that's the most interesting story of the last 3 to 4 weeks. And it's telling us something. It's telling us people are getting excited about the deregulation trade and the lower costs of production that are coming, and possibly the less significant government sector that's, I think, starting a lot of conversations with our clients about, could we see some slowing in the beginning of this administration as contract payments are ceased, consultants are cut, some job losses in the government sector start to come in, and that totally changes the Jan to March to June Fed sequence if we start to see very different job data, but coming more from the public sector than the private sector.
Does that mean that GDP forecasts have more downside bias?
So there's this initial trade, and then there's the long-term trade. Are you opening up the economy to better use those resources more efficiently in the private sector? I think that's the idea.
Well, Musk called it temporary hardship.
And I think the market's starting to sense that a little bit. We'll see. The short-term data is going to be really interesting to watch. Jan 20th, we're going to see a lot of changes really fast. We know there's close to 300 executive orders that the AFPI have put together to put in front of President Trump on his desk, a lot of them to do with deregulation, many with immigration and other things. But I think a lot of industry shackles are going to come off, but a lot of changes in Washington are going to happen with Department of Agriculture, Department of Education, Department of Energy. These are big changes in the way we've done business as a government for decades. This is a Reagan sort of moment.
But one thing you did not mention that you were excited about is tariffs. And that's something that we're already getting a pretty good whiff of.
I think it's always something I've pushed back to the side along with immigration, because I just don't think the stagflationary outcomes that people are pointing to, the magnitudes are big enough. We'll see. We saw tariffs last time. We saw 17, 18, 19. He did it. What happened to inflation? Not much.
They weren't as widespread, though.
Well,
they were more targeted. Steel and aluminum.
We don't know yet. We don't know whether it's tactical or not. Let's see if his tactics work to get prisoner releases, get open markets for our products, get fair trade, get geopolitical tensions down. We'll see. That's the history of Trump tactics, is you go in big. And I think Wall Street's giving him the benefit of the doubt on the art of the deal style, and they're not going, oh, yes, you're definitely going to do this number.
The market closed at the high yesterday.
And I love it. I love the way we're lining up.